Okay, I just want to take 2 minutes of your time to show you the benefits of becoming a member of the Green Star Trading Patreon, all the various things you can unlock. So here we are on the Patreon page as you would see it as a prospective customer. So let's just scroll down before we discuss the tiers and have a look at what I've done recently. So if you were to become a patron today, you could potentially unlock 150 exclusive posts, and most of them are going to be video content. For example, I recently did a video for my patrons on bond ETFs. Is it time to buy? Interesting subject. Had a lot of interest from this on the Discord. We've got the most recent live stream from last week. This went on for 4.5 hours and is timestamped on YouTube. We discussed a whole bunch of assets, and the great thing about the live streams is if you request a certain asset in advance, I will find time to look at it. Okay, now I don't care what it is, it could be anything of your choice. I'll try and find time to look at it. We've got a recent Bitcoin video that wasn't available on YouTube as well, where I wanted to go over a few future ideas. Another live stream for you to look at. Another video here, for example, of what I look at in a company. This is going over the financials of companies and how I basically want to assess the health and the value of a company and a stock and the kind of things I look for. And then we've got another live stream here. Then we've got our SCS trades and portfolio monitor. This is a little Excel spreadsheet to help you manage your trading. We've got a few of those as well for you to download, and an explanation of how to use them. We've got a video here on the TLT and the 20-year ETF. None of this, of course, has been available on YouTube. So if you want to become a member today, you'll get access to all that stuff, plus all the educational videos, but it depends on which tier you join. So let's just very briefly run through those. Tier 1, for £5 a month, you will get a exclusive video each week that is not available on YouTube. Tier 2, you get that same video, but you also get access to the public Discord where you can interact with hundreds of members, ask me anything you want. There's an Ask Tom channel there where you can talk to me directly. That's also where you can make requests for the live streams, you can share ideas with one another, and access all the educational content in a nice, easy, playlisted manner as links to YouTube. And then tier 3 is everything in tier 2, everything in tier 1, plus a monthly dividend calendar and stock rating system, and a monthly video for those members to break down the companies I'm most attracted to in those stocks that month. So those are the benefits you can get for joining up today. Please consider it, but I would beg you to leave it to the start of the first day of a new month, because Patreon does not charge pro rata. It will charge you twice. If you sign up on the last day of the month, you'll get charged on the first day of the next month. So please feel free to sign up. We're looking forward to having you on board, but just leave it to the 1st of October in this case, and the 1st of each month if you're watching this advert in the future. Alright guys, thank you very much for listening. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, time for a look at gold. Right, so what I want to do here first is I've hidden away my explanation for this correction. I've got a full count for it and we'll look at it later. But I wanted to talk about a few things first because some of the recent price action has tripped up what I was expecting to happen. Now I can talk through how we can interpret it. I have two solutions for it about how we can interpret it, but they are both going to be slightly problematic with our longer term count. So what I wanted to do first instead was to just look at this corrective structure. We're also going to go back in time, look at the larger time frame on the weekly and monthly time frame for gold, and consider how else to interpret all of this price data. So it might be a bit of a lengthy video. I will timestamp it as best as I can. But anyone who is a member on the Patreon and uses the Discord will know from recent live streams and discussions that it's become a bit of a pig. To explain cleanly, silver's probably even uglier. However, it is what it is. So what about trying to keep it simple? Let's try to keep things simple first. Let's look at this structure. Now, I've been suggesting that it's a regular flat. Okay, let's move it up out of the way. Now, in a regular flat, there are three types of flat pattern. There are expanding flat patterns, which are the most common. There are regular flats, and then there are running flats. Okay, now obviously if you've got access to the Elliott wave series and you're a member on the Patreon, you would have watched a video about all of them. But essentially, what we need to know is that a flat structure has a subwave count of 3, 3, and 5. Okay, and it is labelled a B and C as such. There will be 3 subwaves in the A, 3 subwaves in the B, and 5 subwaves in the C. In 2 out of 3 cases, both the regular and expanded flat, the C is expected to complete beyond the A. In 2 out of 3 of those flat patterns, the B is expected to expand beyond where the A began. And in 1 of those structures, the B is expected to come back to where the A began, or what we say a 90% retracement, and then for the C to expand beyond the A. Now this pattern obviously satisfies that peculiarity, that particular case, I should say, not peculiarity, there's nothing peculiar about it, excuse me, that particular case. A in 3, B in 3, which comes back above 90%, in this case 99 point something percent, it's basically the same high, almost to the tick the same high. And then 5 waves down in the C. And the C goes beyond the A. C has gone beyond the A, B has come back over 90%. This looks corrective, this looks corrective, this looks impulsive. So in the simplest sense, it has done exactly what we'd expect the flat pattern to do. Exactly what we've been saying for months and months now. So in that regard, job's done. Right? Okay, so staying in this simple world for the moment, with our A and our B and our C that goes beyond the A, and our 3, 3, 5 structure, what else have we got that's going on? Let's just bring up the wave 4 retracement here. Why did we bounce? Why did the market bounce? Because it came to the 50. It retraced 50% of this move. The algos were waiting here, and to the tick, they buy it. That's why. That's why it bounced. Okay, we've retraced 50%. Now, what is 50%? 50% is one of the 3 wave 4 targets. We've got more basic information, I guess you could say, to suggest that we've bottomed. Okay, A's come down in 3, B's come back above 90% in 3, C's come down in what looks like an impulse to a wave 4 target and bounced. It looks really nice. And yeah, I'm not happy. I can hear you saying, well, why aren't you happy, Tom? Because getting this to subdivide is the problem, and we're going to talk about that next. Now, it's a solvable problem, but it's a problem. Okay. Now, you might say, well, in log, Tom, I've seen you use log before, we're still at the 38.2, we're between the 50 and the 38.2, and we're still in that wave 4 box between 23 and... Yeah, fair enough, that's fine. The way I would argue the use, as I've spoken about log and linear scale, I've got a video dedicated to it on my channel, is in non-exponential markets, or where measuring non-exponential moves, I think we have to lean into the linear. When we're dealing with tens of thousands of percent, you know the marketplace I'm specifically talking about, then those retracements aren't going to make much sense. Neither are extensions and Fibonacci extension targets going to make any sense either. So we have to adapt based on the market we're observing. But one thing never changes. 50% of something is 50% of something. Adjusting for logarithmic chart does not let you off the hook. That is a mathematical fact. 50% of 300 is 150. 50% of 70,000 is 35,000. There is no breaking that. In other words, a Fibonacci retracement is, by definition, a linear retracement. Okay, that is something that is unarguable. Does it mean it can't be applied? Alternatively, of course not. Right? We'll apply any tool we can under any circumstance which suits us. Okay, as long as it gives us more confluence, more potential support and resistance levels working together to find support resistance. That's essentially what this whole game is, right? And then the rest is momentum and wave structure. So that I'm going off on one a bit now. So let's come back to this chart over here, this bit of price action. Before we reveal the count, let's just share another thing that I always talk about. Okay, I always talk about in my live streams, I talk about on my channel, I talk about on the Discord. Why don't we trade breakouts? Why are breakouts for suckers? Right? Because they're liquidity traps. They may only be an hour long, they may be a week long, they may be a year long. But they're liquidity traps, short term or long term, and they're there to hurt you. You know, they're there to screw you over because human psychology is monkey psychology, essentially. It's simplistic, it's basic, it's primitive, and people unfortunately fall victim to it every day. So here's what tends to happen. Support level, support level, support level, support level, support level, support level, support level breaks. Oh, short it. Fuck you. That's what happens. I can't tell you how many times it happens. I've seen it thousands, probably millions of times. Okay, well, millions is an exaggeration. I'm being hyperbolic. But you get what I'm saying. I've seen it thousands of times. So that's why we don't buy breakouts, okay? Now, is assuming the continuation of a downtrend a sensible thing to do until that downtrend is broken? Yes, of course it is. The trend is your friend, but it's not broken, okay, until it's broken. It's not confirmed until it's confirmed. So this is a low, this is a lower high, this is a low, this is a lower high, this is a low, this is a lower high, right? So why do we buy and sell retracements? This is a lower high. The next move is going to be to a lower low. Selling here is the move we want to try and achieve, not here. Okay, now the same is going to be true if our Elliott wave count breaks down. We can still trade this. Short-term volatility we can trade anyway. We've talked about that. But longer-term moves we can still trade. Okay, even when we don't know what's going on with the Elliott wave, we don't have to. We can go and find something we have more confidence in, and I would probably encourage that. But that doesn't stop you from being able to trade it. So what does that mean? Well, here's the last high, the last lower high. Here's our most recent low. Here's our support level. Now let's say we get the completion of my pattern, like the idea that my pattern completes, and we get another lower low below support. Right, here's the fifth. No doubt some idiot's going to be shorting this, alright, because they'll see another break of this level and they'll get suckered again. Right, now it doesn't mean it can't go lower. All I'm saying is it's not optimal. It's not optimal. So you come from another lower low, we're still in a downtrend. Now what happens if we come back above that support level and set a higher high? The first one in the sequence. Right? This is a higher high. We come back to a higher low. To support. That's the buy. Right there. That's what you're buying. That's a break of trend. That's a swing high, swing low that has broken the sequence, and that's the retracement. We don't, even again, you don't buy the fucking breakout on the way back up to the upside, right? And break this level. Don't buy that. It's going to reverse any moment. Wait until you get confirmation. Broken higher low, new high, new lower low, new higher low. That's it. You buy the retracement and then you move. You sell the retracement before moving down. You don't sell the breakout. Okay, so I'm sorry to be fucking going off on one of people, but it just, if there's one lesson I could teach which has nothing to do with Elliott wave, it's don't fall for those sucker plays. Don't chase it. For fuck's sake, don't chase it. Let it come to you. Now I know I'm going off on one, but it's one of the most fundamental things you need to learn as a trader. Now I'm not lecturing, I've done it. I'm speaking from experience. You know, we've all been novices at some point and we've all gotten suckered into these things. Don't buy the breakout, buy the retracement. Don't sell the breakout, sell the retracement. Based on the pivots I just showed you. Higher highs, higher lows, lower highs, lower lows. Is that sequence broken? Waves move in threes and waves move in fives, right? So anything which breaks the sequence is either going to be 3 waves up or 5 waves up. You're getting in off the first retracement here. So you've got at least a third move to a new high to secure profit. Worst case scenario. Best case scenario, you've got 2 more waves up. See what I'm saying? And that's the essence. Now I go into more detail with the STS on like using that methodology on the Patreon, but it really is that simple. Guys, and if you just trade any time frame that you're comfortable in like that, you'll limit your losses and you'll increase your gains. and you'll be able to manage risk as well. So anyway, enough of a bitch and a moan about that. We've had our little moment about trading breakouts. We've spoken about this being a diagonal, so let's look at the count. A, B, C, 1, 2, 3, 4, 5 waves coming down in the C. If we reverse here to a lower low, we get another lower low in the sequence of lower lows and lower highs. We can then wait for that sequence to break, and that's your buying opportunity. Okay, now if it breaks in the meantime, what the hell did I just do? Excuse me, I just managed to load up a completely random chart. I clicked on the wrong button. Excuse me for doing that. Let's try again. Okay, so here we are back on the gold chart. I don't know what I pressed then, guys. Sorry about that, technical error. So as I was saying, we get another lower low, and then when that sequence breaks to a higher high, now we're in business. Not straight away, because that would be buying the breakout. When we buy the retracement, limit our risk. Okay. Now, if it happens in the short term, like I said, you take out this high, you've got a lower low, you come to a higher high, we wait for the higher low, we've broken the sequence, and fuck it, trade it anyway if you want to. We're going up. 100% we're going up at that point. Okay, so whatever it turns out to be, Elliott wave, you can figure that out as and when. But I would honestly argue, like I said a moment ago, that even though we can still trade like that with no knowledge of Elliott wave, we can trade the swings with no knowledge of Elliott wave. It's better to have an Elliott wave structure which at least explains what's going on. Okay, and we've got one at the moment. Whether or not it holds, only time's going to tell. Alright then, so W, X, Y into A. 5, 3, 5 into B with the 3, even though it's a 5-way structure, it's a corrective structure, the wild card of a triangle. A, B, C, D, E. A into B into C into B, 5 down into C, 3, 3, 5 flat pattern. That's what we're waiting for. So one more rollover should come. Keep an eye on that on that diagonal invalidation. If that breaks, it's not a diagonal, it's something else, and you can either trade it as I just spoke about, relying on the pivots to lead you higher, or go off and figure it out, because I'll be scratching my head at the same time, guys, trying to figure out what's going on. Okay, so now let's have a look at some geometry here as well. Why isn't that in the folder? I have no idea. Let's pop that in there. So, what do you do? Now let's have a look at the geometry we've got going on here. So I've been using essentially this pitchfork, modified shift pitchfork, to contain price. So other clues, we know that a move above this high is the biggest clue of a broken downtrend, and we can see clearly from the move inside of this pitchfork that would easily break this trend. So a continued force up and break of this trend is going to call into question our count. We've got our diagonal invalidation to confirm that the count is broken. We could also use a parallel channel here for the exact same reason. Break this, get above this high, and you're in business to the upside. Not immediately, probably. Retracement to backtest, that's the one you'd be looking to buy. But we'll need another explanation. We will need an explanation to figure this out. So let's talk about possible explanations next. I think that's what we need to do now. Now, looking at the time, I think we're going to have to write off silver for today and come back to it some other time, because I think the point I'm trying to do in this video is to offer a little bit more than just an Elliott wave count. Alright, so we've gone over the short-term time frame. I've waffled on, given a little piece of advice about breakout trading as not to do it. I've spoken about this 7-way swing, the diagonal, the primary count, la-da-da-da-da. So how about we do something a little different? We zoom all the way out this time, and we come back. I've left that on the chart from some time, but it's going to be required, so we'll leave it there. We'll come all the way back to the weekly time frame, shall we? And we'll look at the chart. And now what we're going to do, going all the way back to 1834 apparently. I don't think they were trading contracts for difference back in 1834, but either way. Let's get back to the point. So, if it's not what we think it is, what else could it be? Honestly, we're going to have to come back a long way to help explain it. And let me try and explain why we need to come back this far. So, the primary reason we need to come back this far is this thing here. This is 7,168 days of correction. 3 waves to a lower low. 7,168 days of corrected price action in gold. From 1980 to 1999. Okay. Now, whatever happens next in our sequence, if this is our one of grand supercycle or supercycle, I've got supercycle here, we should probably label it grand supercycle. Okay. If this is our grand supercycle, then what happens next is going to be the first 1 and 2 of supercycle, or the first 1 and 2 of a lesser degree of that larger degree. Now, I'm going to have to try and explain that, but either way, this is a big ass correction. So what we've got next, boys and girls, is 1 and 2. La-di-da-di-da. We could argue if this is grand supercycle, this would be supercycle. I may have taken myself out of my own scale here because I may have labelled this supercycle, but it's completely fucking irrelevant. Either way, 1, 2, that's cycle degree. So 1, 2, 1, 2, 1, 2, off we go to the moon forever. Now, if you are a long-term inflationist and you believe massive fiscal expansion, fiscal spending, massive debt increase, massive fiscal deficit increase, massive money printing, and so on and so forth results in inflation, then you don't have a hard time imagining gold going higher, do you? It's pretty freaking obvious. So in that circumstance, you're a long-term inflationist like me. I'm a long-term inflationist. However, I disagree with a lot of the crowd currently about how that works. I've spoken about inflation in my live streams before. I believe inflation comes in waves, and each wave gets progressively fucking worse until you call game over. Right, that's how I believe things happen, and it takes longer than people give it credit for. When the final wave and the final moves of inflation arrive, it happens like a goddamn nuke going off, but it takes a long time to build into that. And I believe, with the exception of the period of inflation through the 1970s, because I believe monetary conditions and fiscal conditions were completely different, that was its own series of inflation. It could be a one wave and a much longer sequence of inflationary waves, but regarding our current experience of inflation, circa 2021 onwards, then I would point to this being the first wave of it. Okay. The next wave is going to be twice the size, if not bigger. Maybe a factor of a third bigger. 50% bigger, maybe twice the size, I don't know, but maybe twice the size in terms of the impact it's going to have. So if that's the case, and we've done single digits mainly this time, we'll do big double digits next time, and then we'll be off into nightmare territory. But a lot of people see inflation, some of the die-hard inflationists just see it doing this. I don't see that. I believe the interest rate increases, the interest rate hikes, the tightening monetary conditions. When I look at the ISM over the last 12 months and I see it dropping every single month without fail and new orders leading the way as inventories build, I see a deflation event coming, and a pretty nasty one. So I see inflation doing something very different. I see inflation has come up in this wave and it's going to plummet into deflation below where we began. Okay, because that's how hard the central banks are hitting the economy. The idea that inflation is going to go up and then come down to a target and then progress evenly forever, that seems a bit crazy to me. But either way, you get your first wave of inflation, your central banks stamp it to death, but they crush the economy doing so. So when they crush the economy at this end, just like when the central banks overreacted at this end of our inflationary cycle, they will overreact at this end of the deflationary cycle. They'll panic, and this will be UBI, infinite money for everyone. It will be, it'll be probably negative rates for the first time in the United States. It will be infinite QE, negative rates, UBI, you name it, anything to get the economy moving. And guess what that will do? First wave of inflation. Overreaction here, that will create the next wave of inflation, which will be infinitely bigger, or considerably bigger. So I don't see it going as a straight line like a lot of people do in terms of inflation. I see it coming in waves, and I see each wave getting progressively worse over the next generation or less, maybe a decade, maybe less than that even. It depends how fast and quickly they overreact. Alright, but it could take years. But either way, I see long-term inflation just being the way things are going to pan out, and therefore gold going higher makes sense. Eventually, once you defeat that second wave of inflation, the third and final wave, I think whenever it comes, that will be the game. That will be game over. At that point, there will be no fixing it, there will be no replacing it, there will be no stamping it out. That will be the end game for our current monetary system. Now, it could come at the end of wave 2. The next wave of inflation could be so bad that we just call quits on our current monetary system and we have to start over with something new. But who would? I know people. We all know people who've been saying that for 30 years and they've been wrong for 30 years. They can kick the can down the road more effectively and more often than any of us could have imagined. So let's give them the benefit of the doubt of being able to do it again for a while longer, because they've been able to do it so often already. So anyway, getting back to the point, little discussion about inflation over, let's get on with this idea of 1, 2, 1, 2, 1, 2. So what do we like about it? Well, we like that we seem to have 5 waves so far in here. Okay, or we are working on 1, 2, 3, 4, 5. This will bring us into a 1, which will bring us into a deeper correction into a 2, 3 of the 3 of the 3. What we don't like about it is the scale of this relative to this. Saying 1, 2 at 1 lesser degree doesn't seem right to me. So what we can do, quite simply, is move down to another wave degree within the larger wave degree, which will one day complete. So something like this. We're going to have to come to the month chart for this, guys, because markets are going to be around a lot longer than you or me individually. Okay, aren't they? So 1 into 2, 1, 2, 3, 4, 5, 1 into 2, and so on and so forth. Or perhaps nowhere near needs to be that deep. But you get my point. That could be 1 into 2 grand super cycle. This could be 1 into 2 super cycle, and this could be cycle waves, and therefore smaller, and therefore it makes sense that they are 1, 2 cycle. Here, 1, 2 primary, perhaps. So we can look at it that way. Let's also therefore consider the possibility that this is bearish. Okay, so whether we say cycle or whether we say super cycle, let's go with super cycle and say 1 here, and what about 2 over here? 3, 4, 5. Now here's a bearish count. So instead of going what we've done, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, that's what we're expecting. What if it's A, B, C, and gold's coming down to 600 something bucks? Okay, now yeah, we can sell our spots, we can short aggressively, we can do everything we need to deal with this from a spot point of view. Those of us who have exposure to physical gold, we're probably going to cry ourselves to sleep for a while this is happening, but then we're also going to completely go insane when the opportunity comes to buy gold at 600 odd bucks for that next inflationary wave. Assuming that this is how it plays out. I have no idea if this is going to play out like this. I'm just trying to riff a lot live and think about what we can see here. So buying gold is a dream at this level. Alright, absolute dream. It would be amazing if it happens. It would suck to get there, but it would be amazing when the opportunity finally comes. So there's one possibility. Now, what's the problem with this? There's a few things that are problematic. Now, we could see this as 5, but it literally can't be. So even if it looks like 5 and we try to count it as 5, it literally can't be, because the B has come back beyond the A, so this has to be 3. Can't have 5, 3, 5 where the B goes beyond the A. There's no such thing. So this is 3. My guess would be that. Maybe W to here, X and Y. This is an A, B and C to here. And at which point, this is somehow 1 into 2, 3, 4 and 5. Okay, to get our C. Now I don't like that, because I can't get a 1 in here, and that 2 goes back 99%, and I can't get a motive wave here anyway. But maybe we don't need to. Okay, maybe we don't need to do that. Maybe we can find something else in here. What if we were to go 1, 2, 3, 4 and 5 into here, right? Well, we can't have 3, 5 5, can we? Okay, so what if we go A, B, C, and we go 1, 2, 3, 4, 5 in the C? Maybe it was 5 waves in the C that we saw. Right, so let's have a think about how that could work. So, a long time ago, in a galaxy far, far away, I was suggesting that the correction here was a combination. You might remember, if you go back and look at some of my older videos, that we had a triangle in here. Triangle. Like so. Actually, it was from that pivot. And that this was a zigzag, double zigzag, into a triangle for a sideways combination. Zigzag, triangle. Then impulse. 1, 2, 3, 4, 5. Into here, completing the C. Don't have super cycle available, because I never thought I'd be operating at this level. Okay, so there you go. 1 here. This should be cycle degree, excuse me. I'll get there, patience. Now, like, I'm just thinking aloud. If this helps any of you figure out your own ideas, good. 1 and 2's down here. And we've gone flat, A, B expansive, C will go beyond the A. So we'll go at least beyond 1050, unless we have a running flat here. We could have a running flat, in which case you could argue for a 61.8% extension instead, which could be maybe 1424. That's in log. What's it in? It's 1535. Right, seems extremely shallow for a C. That does. The 61.8. 100 though would bring us in before the lows. That could be a $1,200 target there. What's it look like in log? It would be 1123. Anything beyond that would be expansive. 123.6, 131.8, 161.8 would all be expansive targets. Anyway, they all bring the C below, creating an expanding flat. It's not a regular flat, it would be an expanding flat. A running flat would have to finish early at the 61.8 or at the 100, and then you could come out of here. But either way, blah blah blah. What this does is it solves the issue of this not being an impulse or a motive wave. It solves the issue of this not being a linking part of an ABC. It turns it all into one correction and gives us an impulse into a high of a C of a B. Now we can go 1, 2, 3, 4, 5, 1, maybe a flat, A, B and C to 2, and then 3, 4 and 5 down here. Okay, so contradicting pretty much everything I said earlier about trading the higher pivot. One scenario where this could come back to bite your ass would be a flat pattern which reverses lower. However, a flat pattern which reverses lower after making a higher high, here's the retracement to 61.8 or 78.6, is still a better cock up as a buy with your minimal risk than it would be buying the breakout, which would be the worst possible thing to do. So there you go. You see, it's always in play. That methodology is not to make that mistake. We don't know that's going to be the case. Haven't got a clue. But here's an idea. So let's just save all this, and I'll start backing up some ideas. Right. So I know this is a long one for YouTube. This feels more like a weekly live stream for me. And you know, feels more like a Patreon exclusive than a YouTube video. I know I'm going off on one, so a lot of you might look at this and go, Jesus Christ, I've got to sit through all of this. You don't have to. This is a bit of a one-off. I needed to collate my thoughts, so I might as well do it publicly. You know, that way you will receive the maximum amount of ridicule. So, long-term alternate 1. Grand Supercycle 1, 2. Supercycle 1, 2. This is an ABC, and it's going to unfold like that. Alright then, no, that's one idea. Another idea, there's no getting around this being a 1 and a 2. So, let's just keep it as such. So this time say supercycle. And how about this time we go 1 into 2 at cycle degree. And this time we go, I said, Tom, you're just creating the same count again. I am, but I'm going to have a top here as opposed to one more move up. We're expecting 1, 2, 3, 4, 5. So let's just take the exact same shenanigans we did, but we're going to shift it around a little bit this time. We don't need an additional pivot. We don't need ABC with 5 within the C. We just need 5 to a high. So we can go 1, 2, 3, 4 using our combination, 5 to a truncation. So 1 to there, 2 to here, 3, 4, 5. Primary. So here's an alternate count. We don't have to make a new low in this count. We don't have to come back much more than we already have, actually. I mean, so we've come back 50 in linear, we've come back 61.8, maybe come back into price support, who knows. But either way, we'd have to do it like this. We'd have to go 1, 2, we can use that funky correction of a sideways combination. And I know we've got no alternation, but that's just a problem. Just got to deal with it. And we've got a truncation, also a problem, but going to have to deal with it. Right? If we're not going to make another high, which is my primary count, 1, 2, 3, 4 high, sorting it out into a high is complicated. Right? It's just ugly, but it's the best we can do at the moment. So here we get 1 into 2, and at that point we could be looking at a retracement, wave 2, golden zone, 61.8%, brings us into all this prior level here. You've got some support here. Look at all this support back here. Highs, 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 lows, right? It's around the golden ratio, it's in that territory. Support here. So this could be coming down as 1, 2, as I said, 1, 2, 3, 4, 5, A, B, C, 2, 3, 4, 5 into here, and you've got well, actually no, that could be A. Sorry, excuse me. What am I talking about? 1, 2, 3, 4, 5, A, B, C, B, C. Zigzag, 2, off you go. And that would basically be the next alternate, I honestly feel. So let's throw that in LFT alternate 2. Right then, so that's enough for today, I honestly feel. Let's go back to the primary one more time, and our current long-term count up to that high. Let's remind ourselves what we're talking about. 1, 2, 3, 4, 5 into 5, into C, into 4. Flat completed. B came back to where the A began, C completed beyond where the A finished, into a 3, 3, 5 structure with a diagonal in the fifth. That's still the primary. We've spoken about our diagonal invalidation. We've spoken about the break of geometry. If everything moves higher from here before completing another lower low, then maybe that bugger of an expanding pattern is playing out. Or maybe something else is happening that I haven't seen. Okay, and feel free to make suggestions. The one suggestion I would recommend that you not make, but it's up to you, is that this whole thing is WXY as a double zigzag, because I ain't buying. Right, it's not fulfilling the role of a double zigzag. The X is coming all the way back to here. I'm not going to say it's impossible. I'm not going to say it's impossible, so maybe I'm being a bit of a dickhead telling you not to suggest it. Problem is, a double zigzag fulfills a replacement of a zigzag. The whole point is to have a sharp correction. A sharp correction, guys. Zigzag, X-wave, zigzag. This does not resemble a sharp correction, does it? It resembles a flat. This whole thing resembles a flat pattern. Now, if you can get a WXY into here as a sideways combination that I haven't seen, brilliant. Please, please tell me how. But I can't see it. But I'd be happy to listen. You know, so if you can figure that out, great. But I think we're getting into more complicated territory for no reason at that point. But if you have an alternative suggestion, I'm all ears. I've discussed my primary. I've discussed the parameters I want to see for it to be contained and be correct. I've discussed what to do even if it doesn't work out, and I've discussed long-term alternative options that we can start fleshing out in case everything goes to hell. Alright then guys, thank you very much for joining me in this technical analysis of gold. I apologise for it being such a long-winded video with me going off on one several times during it, but sometimes, you know, it's fun. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and if you're not following me on Twitter yet, there's a link to my Twitter feed in the description as well. Huge thank you to my Patreon subscribers. Your support is greatly appreciated, and if you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, and feel free to sign up. Alright guys, take care of yourselves, and we'll do this all again for silver when we get the time. Okay, take care, see you soon, bye bye.